What's a better investment in today's market, apartments or houses? That's the topic of today's podcast. And if you're a regular listener to the Michael Yardney podcast, you know I usually have guests on this show, but I thought this topic is too important, so I'm going to be doing a monologue, a long discussion about what's better to invest in, a house or apartment. Now, I could give you a simple answer, but that's not going to give you the benefit. I'd rather you have a listen to the thought process behind my decisions, and then I'll give you an answer. Of course, I'm also going to share my mindset message with you. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Is it better to invest in a house or an apartment? Well, that's an age-old question, but the shift change to a new working and home life prompted by COVID last year, combined with the loss of confidence thanks to some shoddy high-rise apartment buildings during the last building boom, both of these have seen investors increasingly shy away from investing in apartments. It seems that more investors are now asking if apartments still make good investments. Well, my response is, it depends. It depends upon the location of the apartment. It depends if it's a family-friendly apartment or if it's in one of those high-rise Legoland buildings. It depends upon the neighbourhood, the size of the apartment, plus a myriad of other factors. So in today's podcast, I want to unpack the challenges the apartment market's facing. I'd like to explain to you a bit about what's driving the change in sentiment from investors. And I'd also like to tell you what I think is going to happen moving forward. And then I'm going to answer the question, should you invest in a house or apartment? Now, I could just answer the question for you and have a really short podcast this session, but the purpose of this longer chat, and I'm going to go into quite a bit of detail, is to help you understand the thought process behind the way I make my investment decisions, to help you understand how to think like an experienced investor, the things that I've learned and the research that we're doing. So let's start with the concept of how apartments have performed over the last decade. And to be blunt, they haven't performed as strongly as houses. Over the last few years, houses have generally outperformed apartments in Australia's major capital cities. While record low interest rates improved house savings, low listing volumes, post-lockdown lifestyle changes, returning of cashed-up expats, government incentives, soaring consumer confidence, all these things together have spurred a surge in prices in the housing market. Trends in apartment prices showed a different story. Now, I remember times in the past, for decades, for years, when apartments outperformed houses, particularly in Sydney and also in Melbourne. But for the last decade or so, house values have risen more than twice the rate of the growth of units of apartments. And the current property boom has widened what's already been a sizable price difference. For example, Sydney's median price of $755,000 for apartments is now about $355,000 or 32% cheaper than the median price of a house in Sydney. Of course, historically, apartments have always been cheaper than houses, but it's the gap in price that's grown particularly wide in the past year. You see, demand for apartments has dwindled, with much of the traditional buying market for apartments, who've traditionally been investors, particularly overseas investors, as well as migrants, well, they've disappeared. And at the same time, the tenants for many apartments, migrants and international students, they made up the tenant pool for most of those new high-rise apartment towers scattered around our capital cities. They've disappeared. That's, of course, increased vacancies, decreased rents, in some cases up to 30% in the CBDs, and combined, this has discouraged investors making new purchases. But it's important to remember that what I'm talking about at this point is big picture overall statistics, and there's not one size fits all for all apartment markets. As you clearly hear me say in most of these sessions, there's not one property market, and so we can't even say there's one apartment market. Some apartments, especially family-friendly low-rise apartments in good lifestyle neighbourhoods, they've still performed well, and they're likely to remain in continuous strong demand. So as I unpack what's happening in our property markets and our apartment markets, let's have a look at how many people are actually living in apartments to put some context to this. According to the Australian Bureau of Statistics, prior to the pandemic, the last time we did the census in 2016, more Australians than ever were taking up apartment living. It was part of their preferences, convenience, there was lots of lifestyle reasons. In 2016, on the night of the census, 10% of Australia's population, 2,384,000 people, spent the census night in an apartment. This meant that there was about one occupied apartment for every 5 occupied houses in Australia. More and more of us are living in apartments because when they did the census back in 1991, 2 decades ago, only 1 in 7 properties was an apartment. Now it's 1 in 5. This growth in apartment living has primarily happened in our urban regions, and it's concentrated in our big capital cities. But Australia's reorientation of apartment living was fueled by a number of factors. Amongst them were young couples delaying having a family. The millennials lived in apartments, they liked the lifestyle, they liked living in the location where a lot of these apartments were. There was also baby boomers downsizing, and of course there's an increased number of single people households across our country, and apartments suit them, don't they? But that was then. Fast forward to the COVID pandemic that we had last year, and I bet you when we look at the data today, it would look very different, but the census doesn't come out for a while. But we know last year apartment renters fled from the cities and moved to suburban regions. This, combined with the biggest collapse in overseas visitors and foreign student arrivals in the nation's history, it drove down the number of people wanting to rent apartments, and it drove up the number of empty apartments, again, particularly in our capital cities. Again, there's not just one apartment market, and the inner city, the high-rise towers, have performed very differently to the low-rise and medium-density apartments in our better suburbs. What this means is that vacancies have risen significantly in the big apartment towers in our capital cities, and rents have plummeted, and that means values have dropped. Now, an interesting trend that has occurred, and you've heard me talk about this in previous podcasts, and a key driver in the divergence of Australia's houses versus apartment markets last year, was the importance of neighbourhood. The global pandemic really brought this out. Sure, last year offices were shut and lockdowns were in place, but moving forward, I think more of us are likely to continue working flexible rosters and working from home more than ever. I know I have, and I know most of our team at Metropole are working much more flexibly, working 2-3 days from home and a couple of days from the office. What all this means is that gone are the days where our home was simply a place to rest our heads and enjoy some downtime between work and our social lives. The coronavirus has put an end to life as we now know it. Now, I don't know how it's all going to moving forward, but I'm sure that some of these trends are going to remain. And if this has taught us anything, it's taught us the importance of the neighbourhood we live in. If you can leave your home and be in a short, 20-minute walk, ride, public transport, to great shopping, to your favourite coffee shop, to amenities, to a beach, to a great park, that's now the new golden standard of where people want to live. While in the past, many people chose to live in apartments because of the convenience of living near work, now the new remote working flexible lifestyle born from the pandemic means that many workers can now work from almost anywhere, so they're no longer tied to being a short distance to the office. These days, the place people want to be is not near the CBD, but in lifestyle neighbourhoods where all the amenities are close by. At the same time, COVID has changed what we want from our homes. It's not just the importance of neighbourhood which has shifted Australia's views. The legacy of lockdown and the work from home movement has made many Australians reevaluate exactly what they want in their home themselves. All of a sudden, people are trying to find space to work, study and also relax under one roof. And in many cases last year it didn't go well, did it? prior to COVID, more Australians were trading space for place. They were happy to have smaller accommodation to be in the right location. They were embracing apartment living. They were trading their backyards for balconies or courtyards in our inner city locations. But now everything's different. Now we want more space. We want a Zoom room. We want a bigger yard. We want a garage that can be converted into a gym. So this has become more important in what we look for in our homes. Now, as I'm talking to you about these various trends, the theme of my chat today really is, do apartments still make good investments? But I'm giving you various bits of background to help you understand why I'm coming to the conclusion that I'm going to share with you in a moment. Part of what has had to be considered is how many apartments there are. Is there an oversupply? Is there an undersupply? What's the demand going to be? And what's the pipeline of apartments moving forward? And currently, there's a significant slump in approval for new apartments. So while we know that there's been a building boom boosted by various government incentives, including Home Builder, while we're building more detached houses, we're building more townhouses, but there are very few new apartment complexes in the pipeline. Sure, our government's been busy getting the construction industry going, but it also has another plan. It's got a business plan to grow Australia's population to help drive our economy. And it was previously thought our population would grow to 30 million people by 2030. Of course, those plans are on hold for the short term, but it's still suggested that our population is going to grow to 29 million people by the end of the decade. This means there's still 3.5 million people we're going to have to accommodate somewhere over the next 8 years. I have no doubt that when our borders start to open, our government's going to allow people to come in. We need more skilled migrants, but we need more people to make the economy keep ticking and to pay taxes and to help increase our GDP. This means that once overseas borders are reopened and immigration returns, we're going to have a shortage of apartments because we are not building many, and the lead time to build those big new high-rise apartment complexes is much, much longer than for building new houses. Of course, many people are going to come from many of these other countries to live here. They're used to living in high-density apartment complexes. In fact, they prefer to live in apartments. So we're going to need to build more. We're going to need to accommodate many of these people really quickly. But we've got to build the right sort of accommodation. Over the last couple of decades, many of the high-rise towers that we built were not the right accommodation. They weren't built for owner-occupiers. They weren't family-friendly. What ended up happening was they were cookie-cutter style blocks built for investors, and particularly for overseas investors who didn't really understand how we want to live today. I believe many of those apartment blocks are going to be the slums of the future. I'm talking in particular about a lot of those very tall, high-rise blocks with small apartments, not just in the CBD, but also many of those cookie-cutter Legoland blocks close to our CBDs around Australia. They never made good investments. They offered very little scarcity. They had no owner-occupier appeal. And as I said, they were built in particular for investors who didn't really fully understand what our local market required. Worse still, because of the high developer margins and the marketing costs, many local investors, they paid too much to start with, and they've found that since completion, the value of their properties are considerably less than what they paid for it, and property values are dropping, as I said, because of higher vacancies, low rental returns, and nobody wanting them. Of course, a lot of those buildings are also faced with major structural defects, fire issues, water issues, leaking balconies. As I said, the sad reality is that today, in light of many of these media reports, some of these towers have now instilled a crisis of confidence. They've all been tarred with the same brush because there are some really great apartment buildings built over the last 15 years, but investors are shying away. This sector of the property market has lost the trust of the buying public, and it's going to take confidence quite some time to restore. But the various stakeholders, including state and local governments, the construction industry, including the building surveyors, they're all scrambling to shore up the building sector. It's an important part of our economy. We've got to get it going again. But at the moment, investors are shying away and people are not going to start building new apartment buildings until we get a demand, because remember, most of these have to be pre-sold to get finance to build these developments. But the high publicised failures, the defects such as Opal Towers in Sydney, is still in memories of investors. But as I said, not all apartments can be lumped in the same category, so avoid the inner city CBD apartments, but family-friendly, establish those old blocks of apartments that we used to call flats when I grew up, or low-rise apartments in aspirational lifestyle suburbs. They're still in strong demand from owner-occupiers and tenants. And there's a huge demand for apartments for baby boomers to downsize in good locations. They don't need their big front or backyards. So some apartments are going to do really well moving forward, and I'll give you a bit of a summary of that as we move on. One other trend I think that's going to be important as we look forward is that as new apartments are being built, that new round of apartments are going to cost a lot more to complete. Partly because they're going to have to be more careful in the construction techniques, and the insurance is much harder for builders and for surveyors now. So the building cost of the next round of apartments is going to be considerably higher. And this will, of course, push up the price of new apartments. As we discuss the factors that I'm considering when making the decision what's going to be a good investment moving forward, an apartment or a house, it's important to remember that property markets are cyclical. When analysing the inferior performance of apartments over the last decade, as I said, it's important to remember that all asset classes move through cycles, periods of growth, periods of correction and contraction, periods of sideways drift. And this means that while in the short run returns can be inconsistent, it's very well documented over the long term that investment returns eventually revert to their long-term averages. That is, periods of below average growth, like we've had, tend to be followed by periods of above average growth, and vice versa. So while houses have outperformed apartments with regard to capital growth over the last decade, for the 10 years prior to that, many well-located apartments grew in value as much as houses did. In fact, many of my apartment blocks performed better than houses that I invested in. So the fact that houses have displayed strong capital growth rates over the last decade or so, due to appreciating land value, interestingly applies that apartments in the same streets as those houses are currently intrinsically undervalued. Think about it. If the value of the land under a house has gone up, the value of the land under your apartment in the same suburb has also gone up. Now, of course, the high-rise blocks where there are 200 in a block that have very little intrinsic land value attached to each unit, that's because developers aim to squeeze as many apartments on the block as they can. So that's why we don't invest in there. But on the other hand, the low-density blocks, those older, that we used to call flats, blocks of flats, 8 to 10 apartments in great suburban locations with yards, with courtyards, they've got a significant land component attached to each apartment. Logically, therefore, despite limited growth over the last decade, if the land in a particular suburb, in a particular street, has increased in value significantly over the last decade, as can be seen because the houses have gone up, then the apartments, which tend to have a 40, 50, 55% land value component, they must also be worth more. In fact, intrinsic land value implied by house price growth during the last decade suggests that apartments may be fundamentally undervalued by 30 to 40%. Well, that's the suggestion of independent financial advisor Stuart Weems, who's done a great research report on this, which suggests because of this significant undervaluation of apartments, because the land has gone up in value, Stuart believes there's going to be significant price growth for well-located apartments over the coming decade. And I agree that'll happen to correct the misalignment, making the right type of apartment, and I keep coming back to the same words, family-friendly, medium and low-density apartments in lifestyle suburbs, not the inner city high-rise ones. These apartments are going to be great assets worth holding on to or considering investing in. But comparing apartments to houses is unfair. It's a bit like comparing regional Australia to capital city Australia. They're very, very different markets. Of course, if your budget allows you to buy a house or a townhouse in an A-grade location, that's first prize when considering an investment purchase. But our booming property markets means that more and more investors are going to be unable to afford a house in an investment-grade location. I'd certainly rather own an apartment in a top street in a blue-chip suburb than a house in the middle or outer suburbs further away from the CBD. There's strong evidence, it goes back many, many years. Our research data shows that average capital growth rates are highest closer to the CBD, and they decline the further away from the CBD a property is located. And there's data showing that in every capital city. The fact is the rich keep getting richer and they don't want to travel further out, and I believe the gap between values now established in suburban locations and the outer suburbs will only widen. So the fact that many Australians, many investors, won't be able to buy a house means it's not fair to compare a house with an apartment, because you've really got to talk about the location. So putting all this together, in my opinion, the outlook for apartments over the next year or two is likely to remain much the same. There's going to be a bit less demand for apartments than there will be for houses, particularly as first home buyers are incentivised to prioritise buying houses, and investors remain a little bit wary. But in the long term, over the next decade or so, I think we're going to see a shift to Australia's apartment market and much more substantial increases in capital value. I hope I've brought together a number of factors. Firstly, there's going to be strong population growth once our borders reopen, and we're going to need many more large apartment complexes to accommodate millions more Australians. While currently about 10% of our population live in apartments, this is significantly lower than the percentage of people living in apartments in similar-sized western cities to Sydney and Melbourne, where it's not unusual to find 20 to 30% of the population living in apartments. Then, in light of the structural and building problems in recent years, the next round of apartments is going to cost significantly more to build, as builders and surveyors are going to be forced to avoid cutting corners and risking further scrutiny. This in turn is going to push up the price of new apartments and therefore the value of good established apartments. As well as that, there's no longer an oversupply of new cheap apartments or a surge of foreign buyers incentivised to buy cheap stock. Therefore, it's very likely that the capital growth of apartments over the next decade will substantially exceed the growth rate it has had over the last decade, particularly in Melbourne and Sydney, where locals are much more used to living in apartments. But as always, location is going to do 80% of the heavy lifting in a property investment performance, particularly with regard to capital growth. So if your budget allows it, I would be buying a house or a townhouse in an A-grade location. That's first prize when considering an investment purchase. But I'd certainly rather own an apartment in an investment-grade location than a house in a poor location, because if you get that extra capital growth, an extra 1 or 2%, you know how compounding works, and over the long term, the value of the property will increase, the rent will increase, and you're going to have a great investment for the future. So boy, was that a long discussion about apartments or houses. But I hope you got the thought process behind it to help you understand why I see a great future for well-located, low-rise apartments moving forward. And now's the time to take advantage of the opportunities that the current market's offering. So if you can't afford a house, if you can't afford a townhouse, then buying the right apartment in the right location, particularly established apartments, particularly with the benefit of being able to increase their value. So I love adding value. So some of those old apartments, you can put new kitchens, new bathrooms, split system air conditioning, carpets in, and all of a sudden inside is as good as a lot of those new apartment blocks, and tenants love them because they tend to be more spacious. There tends to be better layouts. So I like established apartments. But you've got to choose the right property in the right location. And if you're not sure how to do that, because not all properties are going to increase in value, as you already know now, you can trust the team at Metropole to provide you with direction, guidance and results. Whether you're a beginner or an experienced investor, at times like this, you need an advisor who takes a holistic approach to your wealth creation. That's exactly what you get from the multi-winning team at Metropole. It all starts by putting a strategic plan together for you. Then, if you choose to, you can use our buyer's agency, our wealth advisory, property management, renovations, development services. It's just a bit too hard to do it on your own at present. So why not go to metropole.com.au, find out about how my team can help you, and I look forward to being part of your wealth creation journey.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to talk a bit about stress. Is it good? Is it bad? And how do you manage it? Because, let's be blunt, we all get stressed at times. But what's the purpose of stress? It's actually got a useful function for many people. Imagine you're part of a group of cavemen walking through the tall grass of the savannah on a hunt for your next meal. And suddenly, a member of your group catches a glimpse of a lion out of the corner of their eye. The member motions to other members of the group. In a split second, everyone in the group's on high alert, intensely focused on the movement of the lion. As if the entire group were one person, you're all cautiously moving away from the direction of the lion, never taking your eye off the lion until everyone's out of harm's way. You see, stress is an evolutionary radar system whose purpose is to enable humans to intensely focus on a single threat until the threat no longer poses any danger. It gives us laser-like focus for a short period of time. Everything in our environment other than the threat becomes background noise and becomes ignored. Of course, in the modern world, stress makes it possible for us to study for final exams, to send a man to the moon, to fight off a mugger, even to win a war. Good stress allows us to solve pressing problems, but stress comes at a cost. Stress causes our focus to become very narrowed. It limits our ability to see anything but the problem. Stress forces us to have tunnel vision. Of course, stress that sticks around too long is called chronic stress. Chronic stress damages our immune system, causes plaque to build up in our arteries. It can lead to high blood pressure, with high blood pressure and other things, and you smoke and you have other issues, could lead to stroke or heart attack. Work-related chronic stress inhibits every stressed-out employee's ability to solve the problems of the company because it prevents these employees from being able to look at the bigger picture. Remember, stress narrows your focus. It causes even more stress in many ways. So to stay healthy and solve problems in the workplace, we need to turn off stress. Problem solving, in particular, requires a relaxed mind. Only in a stress-free state are you able to find solutions to the problems you're going to have in your everyday life. So how do you shut down stress? How do you relax your mind? Well, my good friend Tom Corley and co-author of Rich Habits, Poor Habits recently wrote a blog about it, and he suggested the following ways to turn off the stress in your life and to relax your mind. Number one, Tom suggested you laugh more. Find something to laugh about. When you're under stress, find something funny to distract you. Humour shuts down stress and helps reset you so you return to a more emotional, balanced baseline. Tom also suggested people who are chronically stressed consider meditation. Just go into another room, go to the bathroom, devote a couple of minutes just to turn off your mind to meditate. Meditation calms down your mind, shuts down stress, and helps you return to your emotional baseline. Another way of becoming less stressed, according to Tom, and it's well known, is to exercise. Whether it's just going simply for a walk or doing something more active like a run or lifting weights. Of course, you can do yoga or do other things, but exercise is a great way of decreasing stress. And so is reading. Reading something uplifting, reading something that's going to shift your mind away from the negative to the positive to shut down stress. So if you're feeling some stress in your life, I hope some of these ideas are useful for you. That's really the purpose of me discussing this with you. First of all, to understand that stress is normal, what it does to you, and how you can control it. Another way Tom suggested you control your stress is to watch an inspiring movie. Watching a movie that excites you, inspires you, makes you laugh, takes you away to another place. That's a good way of turning off your stress. Or listening to relaxing music. I know music calms the savage beast. Music relaxes your mind. It turns your stress down, doesn't it? Another great way, if you get stressed, is to engage in something creative activity. Paint, write, make something. Engage a creative pursuit that takes the stress off you. Now, I know what some people do when they stress, and they have a drink. Now, moderate consumption of alcohol relaxes the mind. So 1 or 2 drinks is really all you need to put stress in its place. But if you overdo it, well, that leads to a whole lot of other problems, doesn't it? And another way of relaxing and getting rid of some of your stresses is to socialise. Hang out with a friend or volunteer at a local charity or go to a party or a gathering. Socialising relaxes the mind and changes your mindset. And the last way Tom Corley suggested you can control stress is to change your environment. Move away, step away from your desk or your cubicle or your work area, or go into an environment that puts you in a good mood. This washes away your stress, well, at least for the moment. So, yes, stress is a normal part of life. It has a useful function. A little bit of stress can go a long way to helping you get rid of your problems, solve problems, do the right things, be more successful. Too much stress, though, is unhealthy. And if you are finding that you're getting stressed, why not look through that list of things, listen again to see what you can do to lower your stress levels. So, as Tom said, laugh or meditate or exercise or read, watch an inspiring movie, listen to relaxing music, do something creative, have a beer, just one, socialise or change your environment. I hope that gives you some ideas about how you can relieve the stresses in your life. Well, that was a lot of Michael Yardney in this particular podcast, just a solo episode, but I hope you got some benefit from it. If you want to get a bit more information from me, go to podcastbonus.com.au and you can get a whole heap of my ebooks. Podcastbonus.com.au, there'll be a link in the show notes. And if you did get some benefit from today's show and you'd like to tell somebody else about it, why not use the share button on the podcast app, or just tell somebody about the Michael Yardney podcast, or tell the world by leaving a review. And if you do, and I read it out, email me, michael@metropole.com.au, and I'd like to say thank you by gifting you one of my books. And Sal Davey left a review on Apple Podcasts saying family advisor. Both my sons have recommended your advice. One has the book and one subscribes. Well, he has the book, Sal. I've done 9 books. But Sal, you continue on by saying, I really enjoy the insights you give, Michael. So thank you for those kind words. If you'd like to get more information in between these regular podcasts, just look out for me on social media or join our private Facebook group. Go to Facebook and look for the Property Update group, where every day I leave a little insight, a chart, a comment, something I don't leave elsewhere, so that you can keep up to date with my thoughts on the property market. I'll catch up with you again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?